How do we want to
It's
start?
showing right now. Okay, we are now live, and let's go ahead and want you to everyone meet Andrea Fernandez. Can you please introduce yourself?
Hey, Eric, I'm really excited to be here with you on a Sunday night. I know it was Veterans Day, so congratulations to you and all your fellow veterans out there. And we're really happy to be able to come here and share some of the knowledge. I'm a lender and I work for Planet Home Lending.
Okay. So, one of the things we wanted to cover today is just going over the process because the way one lender described it to me is everyone loves to be with the realtor, but they don't want to talk to the lender because being with the realtor is like going to Disneyland and I don't know, going talking to the lender is like going to the front office when you're in high school.
So it's like we never have good news. Is that kind of the feeling that most people have out
Yeah.
there? Yeah, honestly, sometimes our job can be a little bit tricky and we may not have the best news out there, but this is something that I always tell my clients. Is always worth going and talk to a loan officer, even if you're not ready to qualify today. We have all the tools and the knowledge to let you know how we can qualify in the future. So you always have to do the homework because number one issue that I see, the reason why people do not buy homes is because they don't have the knowledge. And honestly, you're not supposed to know it everything out there. Like it's our job and your job as a realtor to kind of teach our clients, right? We go to school, we take classes constantly. We have all these knowledge that we just here to share with the people that do not know. So that's our job to kind of do the homework, learn from you, and actually help you get to that main goal, which is purchasing your home.
Okay. Now, what we're going to talk about today is really like first time home buyers. So let's pretend I am a first time home buyer. I've never done this before. And I'm going to come to you and I'm going to ask, or let's start filling out application. Can you go over the process?
Yeah. So the first thing that the loan officer is going to ask you is your financial information, and we may actually have to ask you personal questions like, are you married? Are you divorced? Do you have to pay child support? Things that some people may find a little intrusive, but we have to kind of have a good picture of what your life looks like today. As the main documentation that we're going to need are the last two pay stubs if you're a W-2 employee and the last two W-2s along with the last 2 years of tax returns. If you're a business owner, we're only gonna need the last two tax returns and obviously also your financial statements. Once we have that, we're gonna run your credit, and depending on your credit, we're gonna have a good idea of where should we place you with what kind of loan. Just to give you a little bit of idea of the main type of loans that we carry, we have a bunch of, but most people will fit in three main loans. One of them is the conventional loan, the FHA loan, or the BA loan. So I know there's a lot of questions regarding this type of loans, and I would not say one is better than the other. I think it all depends on your current situation as your client. If you're a first-time home buyer and maybe your credit score is not too high, you may you might be able to get an FHA loan, and that might be the best loan at that moment for you. But if you're, for example, you have a really good credit and maybe you're giving a really good down payment, perhaps a conventional loan might be the best option. And of course, if you're a veteran, the best loan out there is really the BA loan. And I'm sure Eric knows why. What is the number one reason why the BA loan is the best loan, Eric? Down payment. Oh, I cannot hear you anymore. Eric, can you hear me?
Yeah, number one
Sorry.
is down payment.
Down payment. There's no loan out there, Eric, besides the BA that allows you to buy a home with zero down. How cool is that? And of course, BA loans also have a really good rate, and there's tons and tons of perks about those loans. But in general, those are the three main loans that most people will qualify for. And like I said, there's no better or worse loan. It really depends on your current situation. So once you have been
Okay. Okay.
pre-qualified, the next step is
Now,
really, go ahead.
oh
Eric,
no,
can you hear
I'm
me?
sorry. We have a little delay
Oh,
between everything here. So, oh boy. Andrea, can you hear me?
I can hear you. Can you? Yes, no?
Yep, I can hear you.
Okay, we're back.
Your
Okay.
video's frozen up.
Oh no. Let's see. Can you see me? Okay.
No.
No. Okay, let's do this. How about now? No luck.
Okay, you're good now.
I'm good. Okay, good. Perfect. Okay, so I was saying, once you get pre-qualified, the next step is actually sending you through my realtor. In this case, Eric is a great realtor that would actually help you find your next home. So, Eric, once you have a client, what is the process? If I'm a brand new client, what would you do with me, or what is the process that you do once you get the client qualified?
Okay. Well, once the client's qualified, we now know what they can afford. So then we'll start looking for houses within that range.
So here's
So we'll go ahead and put them on the MLS or an IDX search, Internet Data Exchange, and then we'll start looking for their homes.
So I know, Eric, a lot of people kind of don't understand
Um,
well the process. No.
there's too much of a delay. There's something really wrong here. So I apologize.
Should we
Probably should have
disconnect?
restarted my computer prior to this or something because it's just it's really untenable at this point.
Should we disconnect and then log back in, or?
So we'll have to suspend this and try to do this another time, or I can try to do a restart and see if that does it. I can be back in about 5 minutes.
Okay, let's do it. We wait 5 more minutes.
Okay. Oh, okay. Okay, go ahead.
Can you
Let
hear
me
me?
see if I can hear you. No, I cannot. What
Oh,
is going on here? This is killing me. This is outright killing me here. Uh, why is this not working? Okay, we're gonna have to. So I don't know what's going on my end, but let's see if it works a little bit better now. Okay, go ahead and continue what we were talking about.
okay.
We're still live.
Perfect. Okay, so we were talking last thing we were addressing was once you pre-qualify, I'll send it to the realtor, and in this case, Eric will take you as the client to go and see houses. So I know people get a little bit confused as to what exactly does a realtor or a lender do. So one of the things that I always tell my client, anything numbers related, payments, down payment, type of program for your financing would be your loan officer. But let's say if you wanna buy a house in Summerlin, North Las Vegas, or you want a bedroom with three, a house with 3 bedrooms, two bedrooms, 2 bathrooms, whatever you want, then Eric will be the expert to take you around town to show you those houses. So, Eric, what are some of the misconceptions that you hear about clients when they're asking about loans and things like that?
Well, of course, the number one is you need 20% down.
And this is so funny that everybody says that. And I actually asked this question to a lot of my friends that are not in the industry, and everybody thinks that you need 20% down or a score of around 340 to get pre-qualified. That doesn't make any sense. So if you're first time home buyer, you only need about 3.5% and we're gonna do an FHA loan, or 3% if you're first time home buyer and we're gonna do a conventional loan. In those cases when you actually have purchased a home in the last 3 years, first time home buyer, but you only need 5% if you're actually going to be living on the property. So I mean, this is a really misconception that most people have when they're trying to buy a property. And another thing important to take into account, Eric, is that not everybody needs a down payment. I mean, everybody needs a down payment, but we also have down payment assisted programs that will actually let you purchase the property without any down payment requirement, as long as you meet certain criteria for these programs. But if you're one of those individuals that have always wanted to purchase but doesn't have the down payment, we can actually solve that issue for you and try to qualify you with a down payment assistant.
Okay. And what down payment assistance programs are available right now?
So right now we are a little bit limited on the options, but we still have a few. If you are actually part of the culinary, if you work in the casino industry, the culinary has actually a great down payment assistance program that will give you up to $20,000. If you participate on this program, of course, you have to meet certain requirements from the culinary, like number of hours you've been working, the length of time that you're with the current employer, and then the culinary will do a quick review and see if you qualify for this program. If you do not work for the culinary, then we also have another program that is called Home is Possible. And this program would actually help you with your down payment. They will lend you 2% or 4% of your down payment. And there are some income limits. So most people cannot make more than $98,000 a year. If you do make more than $98,000 a year, you can purchase a home in certain areas, and then you can qualify for the down payment. So obviously, talk to your loan officer to see if this is a good program for you or if you qualify for it. But there's a few options available for you if you need a down payment assistance program.
Okay. So with these down payment assistance programs, now I know you get 20,000 with culinary, like with Home is Possible. How does that work?
Yeah, as I mentioned, the Home is Possible lend you 2% or 4% of the purchase price. So it really all depends on the property that you're buying. There's obviously advantages and disadvantages with the programs. Like I always tell my clients, there's nothing free in life. So these programs actually, Home is Possible, as long as you live in the property for 3 years, they would actually forgive the debt, and then you won't have to repay them back. However, the culinary works a little different in that sense, because they're actually only lending you the money, they're not gifting you the money. So the way how I tell most of my clients is that just think about it as you ask your mom for a gift, but your mom is never going to ask you for any interest only. So eventually you're going to pay back your family member for the gift. And that's kind of how the culinary works. They're willing to lend you the money for up to 30 years, but at the end of the 30 years, or if you refinance or sell their property, you will have to repay them that amount.
Okay. What else is out there that you can think of that people may be interested in?
So right now, we know that the rates are a little bit high. So I know this has made a little bit more complicated the ability of purchase a home. But this is why there's a new program, but programs that we're starting to use a lot more than before. So one of them is the one that's called the 3-2-1 buy down. So essentially, you paying an upfront fee. So for the first year or second year that you have this loan, you're actually going to be paying a lower payment. Okay. The strategy here of this program is that eventually you're going to be able to refinance and actually lower the payment to a much comfortable monthly housing payment. So just to give you an example, right now rates are around 6.5%. Okay. So if I don't want to pay the 6.5%, I can do this 3-2-1 buy down. And then the first year I'll be paying a rate of 4.5. Then after 12 months, my rate is going to go up to 5.5. And then on my third year, my rate would actually be 6.5. Okay. But something that nobody's telling most people is that this is not a free thing. You actually have to pay a good amount of money to be able to offset that rate for the first 2 years. Okay. But like I said, not a bad program if you're a little bit more sensitive about the payment. It actually makes you comfortable to have a much lower monthly payment. And the expectation for the raise in the next year and a half to 2 years is that we're going to go back to a much comfortable rate between 4 to 5%. And it can actually happen a lot faster. Probably a year. It's kind of like the expectations for the feds. Mm-hmm. So,
Okay. Well, the interest rates have just, oh, go ahead.
No, go ahead.
Interest rates have just gone down just a little bit. Can you explain what happened?
Yes. So every month we get the inflation report. Okay. So the expectation for this month of October was that the inflation was going to be 8%. But we have absolutely great news. So the inflation would actually come down to 7.7%, which was a lot less than expected. What this means is that what the Federal Reserve is doing by increasing rates is actually working, because there's kind of a slowdown on the economy. So we're able to bring the inflation a little bit down. So obviously this is positive news for the stock market. Everybody was really excited, and this is actually a reflection that things are working out. So if the stock market feels that things are getting better, this is also super positive for the mortgage bond. And that's exactly what happened. We were not expecting such a great news. So we literally were already on rates at 7.5. And in one day, we went down to 6.5, which was amazing. Obviously, job reports keep coming back. It doesn't seem like, I mean, there's some slowdown in the economy, but it seems like we're actually going through the right direction.
Okay. And I mean, do you have your computer in front of you? What are the rates looking like for the different loan products right now?
So it really all depends on your FICO score, and so there's a lot of factors. A great question. So not every customer out there will get the same rate. So what are the things that would affect your rate? That's probably the right question. So down payment, the product that you're using, FHA, conventional, VA. And there's actually like I mentioned, the down payment. There's a difference between you giving 3% down, 5% down, 15% down, and 20% down. So the way how the bank is going to be thinking about you as a client to dictate a rate is really how much risk am I putting into this client. So the less money you put when you buy a property, then there's more risk to the client, and then I mean to the bank, and then the bank is gonna make you pay a little bit more for that risk. Okay. So let's say Eric and I have the same rate, I mean the same FICO score, same loan, but then I'm putting 5% and Eric is putting 10%. You, Eric, are probably most likely gonna get a little bit of a better rate than I'm going to be getting just because I gave less money down. Okay. Another factor that would determine the rates would actually be the type of property. Okay. Depending on the property that you purchase, there's more risk related to the bank. For example, if you buy a house, a single family resident is less risky than buying a condominium or a manufactured home. Okay. So the bank would actually give you a little bit of a better rate if you can qualify or you're buying a home versus a manufactured home. Okay. So, like I said, there's different factors. It will have to be based on every individual situation and, what kind of property they're buying, what kind of down payment they're giving, and what is the current FICO score. But this is actually a tip that I always give my clients. The higher the FICO score, obviously, the better is going to be your rate. And that's another good subject to talk about. How can we bring people from like 680 to a score of 720 or 740, which is actually a really good score? And little tips like that can actually help you bring your score and be able to obtain a much better rate. I would say the number one thing that most clients struggle with is that they may be having really high balances on their credit cards comparing to the credit limits. And that's the number one factor that actually brings your score down. So, for example, if I have $1,000 credit limit credit card, my balance should never go more than 30% of that credit limit. Okay. Ideally, 50% is okay, but ideally would be 30% of your limit. So if my credit card is $1,000, my balance should never go more than $300. So I know it gets a little bit challenging when we have small credit cards like $500 limit credit cards because it's literally very difficult to maintain the 30%. It's like you cannot spend more than $80 or less, right? And the reason is simple. Every time the credit agencies are giving you a score to provide you a FICO, they're looking at the utilization of the credit. Okay. If if we're having a lot of debt really close to the credit limit, that's actually making it seem like we're living out of our credit cards. And the bank does not like that. So immediately your score starts going down. So little tips like that, like paying down your credit cards, can actually improve your credit so much. For every time you pay off your credit card, your score can actually go 10, 20 points up. So that could be 10 or 20 points up that could bring you FICO to give you a much better rate for a long-term debt like a mortgage.
Okay. So let's say someone pays off their credit card. How long before it reflects into the system?
Okay, great question. It really all depends when the bank is actually sending their information to the credit agencies, but it usually takes about 30 days. Okay. So, for example, if the closing statement was the 15th and they're going to report at the end of the month, then it's going to show a little bit sooner. Uh, but sometimes it may take a little longer just because it depends on the cutout. But I would say in general, 30 days, you're going to start seeing a change on your FICO score.
Okay. Now, if you had your magic wand and you wish every borrower who came to you knew all of the secrets, what are the secrets they need to know about the lending piece?
That's a great question. I mean, honestly, number one thing will be credit, right? Like I mentioned before. But one of the things that I find out that people do not know, um, and this is educational, is like, let's say I have a friend right now that is currently purchasing a home and she has the ability to bring 20% down to the table, right? It's just like, well, I don't want to pay mortgage insurance, which is our first statement, right? Everybody wants to save that money, that $50 to $200 that you might be paying per month. However, sometimes if you give 15% down versus 20% down, that might actually be more beneficial depending on your financial situation. Why? Because if you have good credit and you're doing a conventional loan, your mortgage insurance payment might be kind of small in comparison of you giving 5% down. So for example, some people might be paying only $50 a month for that extra 5% down, right? And that could actually be money that you can be saving to purchase another home or to actually do repairs for the property or things like that. So it might be a good idea to actually analyze the numbers with your loan officer and not assume that, hey, I want to get rid of the mortgage insurance payment because it might be too much. But for some people, it might be just a payment of $30 to $50 that in the long run you can do a lot more with you money and invest in somewhere else. So I would say that's probably one of the tricks that I would encourage some of the clients to do research and see if it's worth it to give that extra 5% more.
Okay. Okay. Well, do you have anything else you'd like to bring out to the folks?
No, I think my last advice to all the clients out there that are trying to buy homes and they're thinking they cannot do it is just please call your loan officer, your realtor. Our consultations are free of charge, and we can actually share a lot of knowledge that could bring you from being a renter to become a home buyer. Okay, it really doesn't take a lot. You just need to have the tools and the information to get you there, and we can help you get there. So please call us. My number 702-569-0778 in case that you want to get pre-qualified today. And Eric, I know you haven't shared your number yet, have you?
Okay. They can get it in the info tab.
Okay.
We're going to go ahead and close it out. I apologize to everyone. I had to do a restart on the computer, and actually, that wasn't the issue. Uh, I was able to figure out that it's my internet is only working at a fraction of what it should be.
Oh no. Well, thank you so much, Eric, for the opportunity.
So we may have to. Oh, you're welcome.
Hopefully, we can reconnect in a better situation with the internet is up and running for sure.
Yes, yes.
Okay, bye, guys. Great seeing you.
Okay. I'll see you guys later.
Bye.